In this video, Tom Lee discusses recent market fluctuations and projects a positive trajectory for 2025, asserting that despite challenges like profit taking and macroeconomic concerns, a bullish outlook persists. He forecasts the S&P 500 could reach 7,000 by mid-year, buoyed by a dovish Federal Reserve and improvements in the manufacturing and labor markets.
I think it was trying to digest a few things, that the pretty dramatic move in long-term yields and the dramatic drop in yields in China. I think that there has been some concerns about macro as you saw some events over the past few days. And I think there was general profit taking and some sort of let's wait and see how 2025 is, given we just booked two 20% back-to-back years.
And do you think that those things will remain overhangs? I mean, obviously, you certainly have a bullish orientation. You feel as if the S&P 500 can get to 7,000 by mid-year before perhaps a pullback. Well, if we're getting from here to 7,000 in less than 6 months, you're talking about, 35% annualized pace of gain. So how do we get there?
Well, I think one thing the viewers need to keep in mind is that just because the calendar year changed doesn't mean that the strength that we saw throughout 2024 suddenly has evaporated. There are tailwinds building because the Fed is dovish, even if they're making fewer cuts. But I think one of the sort of two important things happening early in 2025 is going to be, one, we are seeing manufacturing recover. The ISM manufacturing, posted one of the highest readings in almost 2.5 years. I mean, it's been below 50 basically for nearly 3 years. And the second is that I think the labor market could be softening in a way, because whether you look at link-up data or the ISM employment, to tell us that the Fed now has to be focused back on supporting the economy. So I think this month could be quite decisive in the sense that we've got weakness because of some insecurities building, but I think it's, the same tailwinds are in place. I mean, I think it's still a buy the dip kind of market.
And in terms of perhaps the same themes being in place, does that mean that the leadership profile of the market you expect to stay similar to 2024? I mean, I know it's waxed and waned between mega cap growth leadership and then some broader participation, but we did finish again with dominance by the NASDAQ 100 type stocks.
Investors still are going to pay for earnings visibility, and that's why I think the Mag 7, including NVIDIA, are going to be important holdings. But financial conditions should ease this year. Easing financial conditions does allow some cyclicals to post better earnings growth, like financials and regional banks, industrials, and small caps. So I think that there should be a case for broadening of the markets this year. And then finally, I think in terms of risk appetite, still one of the good measures to look at how risk appetite is to look at something like Bitcoin. And at 97,000, it's still telling us that, this is still a risk-on market.
Yeah, I mean, obviously it's held almost all of its gains since that little poke above 100,000 in Bitcoin. Although I do wonder what you make of the relatively heavy outflow we were seeing in the BlackRock ETF that holds Bitcoin, whether it was just sort of deferred profit taking into a new tax year or something else.
It's hard to tell. And I think with the ETFs, it is creating, I think, an interesting dynamic, which is that someone who sells a BlackRock ETF doesn't have a 30-day holding period if they buy another Bitcoin ETF. So I think in some ways you can see people doing basis swaps and stepped up in tax optimization strategies and not really having to worry about that 30-day holding period.